Good evening and welcome to the Boxborough Select Board meeting of October 12th at 7:08. Noting the time and the presence of a quorum, I call the meeting to order and we'll do a roll call for attendance. John?
Markowitz here.
Diana?
Lipari present.
And Campbell present. A few announcements. Fall town meeting is Tuesday, November 15th. That will be at Blanchard. The last day to register to be able to vote at town meeting is October 26th. You can do that at the town clerk's office. See the town website for more details. The Public Celebrations and Ceremonies Committee is looking for new members, although it turns out some of the members of the RECCOM are now going to take over the holiday tree lighting, at least for this year. So thank you to them. But there's a resident interest form for all boards and committees on the town's webpage if you're interested in volunteering. The town is accepting applications for associate planner and public safety dispatcher. Information on the town's website under employment opportunities. The Boxborough Historical Society will hold its annual meeting at the Boxborough Museum, 575 Middle Road, on Sunday, October 23rd at 2 p.m. They'll have a business session and then an interactive discussion of two Boxboroughs growing up in the 50s and 70s, led by Jean Kangas and Kate West. The Boxborough Library Fall Used Book Sale will be November 4th through 6th. That's from the Friends of the Boxborough Library. Memberships will be available. The main public sale will be Saturday, November 5th from 9 to 2. And then there'll be an Everything Must Go sale on Sunday, November 6th. You can donate your gently used hardcovers, paperbacks, and audiovisual items to the sale starting Monday, October 31st through Thursday, November 3rd. No VCR tapes or magazines or material in poor condition. If you have a concern about an item that is not on the agenda, please raise it during community concerns. If you have a question or comment about an item that is on the agenda, you'll be recognized after board members have the opportunity to get their questions answered. Due to time constraints, the board may not be able to accommodate comments from all residents on all topics. Please wait to be recognized by the chair before addressing the board. This is a forum for public input, questions, and criticisms. However, we ask that all participants be respectful and civil. If a community member displays behavior repeatedly that's inappropriate or does not respect the chair's right per Mass General Law to ask someone to stop speaking at any point, they will be muted for this meeting and may not be called on in the future. All right, so we have no minutes. So next item is community concerns. Does anybody have any concerns they'd like to share? Mark White.
Muted?
You're unmuted.
Thank you. Okay, I'm just going to read a statement quickly. I'll be brief. Wes certainly should have been here for this. I just want to remind this board and the public that tonight is the 1-year anniversary of when this board decided to take Warren Ryder, a loyal employee of the town for 26 years and our police chief for the last 13 of those years, and throw him under the proverbial bus with the decision to call for an FBI investigation into accounting and personnel issues to which he had already responded and which were thought to have been resolved. Since January 4th of this year, you've placed him on paid administrative leave, so we've been paying him to be chief, but not having him come to work. So for 10 months, we have effectively paid him to stay home. In addition, since June, we've been paying a part-time chief on top of our full chief. And in addition to that, we've been paying as yet unknown amounts of legal fees with no accounting to date in relation to the actions that this board has persisted in pursuing. Now, in addition to those costs and still no news from the FBI a year later, we have been made aware of yet an additional action taken by this board to hire a private investigator to pursue what? Maybe go where the FBI hasn't gone? We don't know. How will this be paid for? And why are we, the taxpayers and voters of Boxborough, yet again not consulted? Other purportedly criminal activities of the police department have recently gone to court, so it's public, only to be dismissed without meeting even the lowest bar of probable cause, effectively exonerating the employee of those charges. That leaves me with even more unanswered questions. This board has gone into executive session to discuss criminal charges repeatedly over the last months. Virtually every meeting you've gone into executive session. No explanations have been given to us. All is all under the cloak of executive privilege. So we, the people you represent, have had virtually no say in how you proceed, and it seems even how you are now spending our money. I, for one, am extremely unhappy with how this is going and how it's been handled. And I will be even more so if the FBI comes back with negative findings, which I suspect it will. If it does, I expect we'll see even more legal expenses. I'm sorry, but this is beginning to have all the earmarks of a witch hunt or a wild goose chase, take your pick, all on our dime, without our agreement or our consent. And I don't like it one bit, and I'm tired of it. We need it like a hole in the head. This could have been handled entirely differently, but you still continue to persist in following a path that's leading us to division and strife. I just want to say I hold all of you, the Board of Selectmen, the Select Board, responsible for where this is leading, which isn't a good place. And I think an ever increasing number of people of this town feel the same way. Thanks.
Okay. Any other concerned citizens? Okay, so moving on to new business. The first business is we have a public hearing about the classification of the tax rate factor for fiscal year 23. And so I will turn it over to Kelly.
I'm going to share my screen. Okay, there you go. Can everybody see that?
Mm-hmm.
Yep.
Okay, perfect. Okay, so, well, I'd like to say good evening for all those that may not know me. My name is Kelly Sozik. I am your town assessor. I am here this evening to present to the Select Board the classification hearing of fiscal year 2023. The presentation has a plethora of detailed data, but should only take approximately 20 minutes, which will leave us ample time for questions at the conclusion of the presentation. It takes a diligent team effort from multiple organized departments within the town and the Department of Revenue to get us to the stage of presenting this information to the board. It is going to take an additional teamwork from the accountant, collector, clerk, and DOR, Bureau of Local Assessments, post this classification hearing to have a final set tax rate. As you see, the classification hearing presentation you are about to see this evening has been prepared for the Select Board as well as the town administrator. The purpose of the classification hearing is to report on final values for fiscal year 2023 and to adopt a residential factor. Massachusetts General Law, Chapter 40, Section 56, allows a shift in the tax burden between property classes. Municipalities have several options in distributing the tax levy among taxpayers under property tax classification. Use of these options results in multiple tax rates for different property classes because they change the components used to calculate the tax rate. And I would like to give a reminder that this does not change the total tax levy for the community. It simply determines the share to be borne by each class. Pre-classification, there are 3 steps. One is to determine the property tax levy, which is done through your budget process. 2, determining the assessed valuations, which is completed by the assessor's office. And 3, tabulating assessed valuations by class, which is also computed through the assessor's office. There will be 3 steps to accomplish at a classification hearing. Classification hearing presentation presented by the assessor, determine a tax shift option, determined by the Select Board, and voting a tax shift factor, which again is determined by the Select Board. Post-classification hearing steps will be to sign the LA5 classification form. There is a change this year where the clerk's certificate of vote is no longer required. The clerk's signature text has been modified and the signature alone is now sufficient for the LA5 submission. So that's a little bit of a change that you might be all used to. And send the annual recap to DOR for tax approval. And then 3, obtain DOR approval of tax rates. This will depend on how quickly everything is submitted to DOR and where the town of Boxborough ends up in their queue amongst other communities also seeking DOR approval. So the overview, let me just move this here. Overview of the reevaluation and classification process. Every year, the assessors must make interim adjustments to be at 100% of fair market value, certified by Mass Department of Revenue. The assessors must annually adjust valuations to reflect changes in the tax base due to new construction, alterations, or demolitions in years between 5-year certification. The assessor may undertake and complete a valuation adjustment program without the prior review or approval of the Bureau of Local Assessment. Values were certified by the Department of Revenue on August 29, 2022, and the assessments are based on the sales that occurred during the calendar year of 2021. This year, fiscal year 2023, is an interim adjustment year. Overview.
Kelly,
Yes.
John has a question.
Kelly, I just got a question. You talk about the review, the approval, the review of the Bureau of Local Assessment. Who is that?
That's DOR. It's a branch of DOR. Yep.
Okay, thank you.
You're welcome. Every 5 years, assessments must be at 100% fair market value, certified and audited by Mass Department of Revenue, Bureau Local Assessment. The Massachusetts Department of Revenue requires that all cities and towns to revalue all property once every 5 years. DOR closely monitors the reevaluation project from planning to data quality to analysis to a conclusion. Revaluation certification by DOR is required before the tax rate can be set for the following fiscal year. The objective of the revaluation is to ensure that all property is fully and fairly assessed. Our next full reevaluation will be at fiscal year 2024 and will then be every 5 years according to the Municipal Modernization Act. Here's some important terms. Your levy and the levy limit. These are some terms that we'll be speaking about this evening. And you have them there, I believe. You all have the handouts, correct?
Yep.
Okay. Once the properties have been classified and certified, the select board holds this public hearing. The assessor presents this information to the select board, who then vote whether to establish different rates, which would be your split rate, or to tax all classes of property at the same rate by adopting a minimum CIP, commercial, industrial, personal property factor of 1, which would give us a single rate. Pre-classification hearing steps, general data statistics. So let's see. These are your 5 property classifications. We have residential, open space, commercial, industrial, and personal property. Residential includes all property containing 1 or more units for human habitation. Habitation. The class includes accessory lands and buildings such as swimming pools, tennis courts, sheds. Single-family homes are in this class, as are large apartment buildings. Hotels and motels are not included in this class. Class 2, your open space, includes land maintained in an open or natural condition which contributes significantly to the benefit and enjoyment of the public. Such land cannot be held for the production of income. Class 3, the commercial, includes any property held for the purpose of conducting business, such as office buildings, retail stores, and the like. Class 4 is the industrial class, which includes any property involved in manufacturing, processing, extraction, and includes utility real property used for storage and generation purposes. So on your chapter land, there has been no changes between FY22 and 23. You still have 21 properties in forestry. You have 22 properties in agriculture, horticulture, and you have 27 in recreation. New construction, we had 8 new single-family homes at 100% completion and 22 new condos at 100% completion. Pardon me. The exemptions, our statutory and CPA exemptions were 13,352. The abatements, senior tax work-off participants, there were 20. The abatement amount was 13,629. Appeals, there were 18. The abatement amount was 110,086. And the breakdown is as follows: 12 residential, 4 condominiums, and 2 commercial, and their values beside them, the total values, I should say. The general data and statistics, this is the LA4. This is part of the LA4 of what we all see. And you can see that it's given a parcel comparison between 22 and 23. I can't see it on this one, so I have to look over here. Sorry. In 22, you had 2,200 parcels, and in 23, you have 2,245. That's a difference of 45 parcels, residential, and an increase of 2%. And there's the difference of value on the second to the last column on the right. And there is a negative 2 parcels in commercial and negative 4 parcels in personal property. So that gave us a parcel difference in the total of real and personal property of 39. And I'll go back and describe a little bit of that.
Yeah.
So what happened was residential has I'm sorry?
John has a question, sorry.
No, let Kelly keep going. She might answer it. She's doing a great job.
So the residential has an increase by 45 parcels. 44 of these are condos. One was an exempt property and was returned to the tax rolls as a residential land. Open space, we don't have any in Boxborough. So open space being 0. Commercial, 1 mixed use parcel had a classification change from what we consider a 036, which those codings have mean something. And 0, starting with the 0, tells you it's a mixed property. 3 is commercial, and then 6 would be chapter. So it went from a 036 and how it's being used to a 063. So no longer is it primary commercial, it's primary chapter. So let's see, industrial, no classification change. Okay, personal property. This is where it kind of, I think where a lot of the question will be. So there were 94 accounts in FY22, and now for FY23, there are only 90 accounts. Easiest said is that we lose some and we gain some, and it all washes out in the end. However, a little more in depth, the 501s, which are your individuals, your partnerships, trusts, LLCs, etc. In FY22, there were 28 accounts. FY23, there are 31 accounts, leaving a net difference of a positive 3 accounts. We gained 7 new accounts, but lost 4 accounts. 1 large personal property account, Crown Castle Fiber LLC, closed their corporate headquarters at 80 Central Street, which was $18 million in taxable value in 22. Your 502s in FY22, there were 54 counts, and FY23, there were 47 accounts for a net difference of a negative 7 accounts. We gained 1 new account, but lost 8 due to falling below the $5,000 exemption. So again, wash in the wash, it all comes out to 39 parcels for a total of both real estate and personal property.
Okay, so Kelly, I think my question relates to personal property that would be, say, maybe at Viva Logics or around the bio. Am I mixing 2 things here? Because I know there's commercial property there or industrial property there, but they've also made major investments in equipment and facilities inside the building. Would that be classified as personal property for this count?
For which account?
In other words, let's take Logics. They've made a multi-million-dollar investment in their facilities to be able to do their processes. Does that count as personal property associated with a business, or how would that be accounted, or we're not accounting for that yet?
I would have to look to see if they're being accounted for yet.
Okay,
I'm thinking that where their sale fell, they might not be because of the fact that they weren't there as of January 1, the entity you're speaking of. So, I mean, you're talking about, if I may, only, is it 1414?
yes.
Okay, so they had a December 31st sale. Remember, our assessment date is January 1. So,
Okay.
so I'm sure that if there was something there before, they would have been assessed. Whoever was there January 1, they were the ones being assessed.
I think, Kelly, it's all quite new, and I know this was something that was discussed. Anyway, thanks for all this information. It's actually great. Thank you.
You're welcome. Did I answer your question though?
I may come and ask you later on.
Okay.
Okay. Because I'm
Typically,
not
yes.
being very clear either. Okay.
Okay. Perfect. Let's see. So the total parcel count changed from FY22 to 23. There was an increase of 39 parcels. Townwide valuation changes in FY22 to 23. Single families went up 17%. Condominiums went up 37%. Two families went up 15%. Apartments up 46%. Commercial and industrial 13%. And personal property went down that 14%. And again, that 14%, I'm sure was with Crown Castle.
Okay.
Adjustments to value. So the market, I'm going to move this here. All right. So the market. Below is the residential single family home trending average for the last 3 years, 21, 22, and 23. All sales have been qualified by the multiple listing service, also known as MLS. You can see there was a small dip in the trending average between FY21 and, which is calendar year 2019, and FY22 calendar year 2020 of 38,000 plus. However, a strong increase of 205 plus in FY23 in calendar year 2021. And as you can see, the condominiums are still at a steady rise, maintaining around $45,000 average per year. How the calculations were derived was taking the total of the valid sales and dividing by the number of those sales. This is going to give you a fantastic visual of the top 10 single-family home sales in 2021. And why I put this slide in here, because I really think it really speaks volumes to the fact of people coming in and asking, why is my value changing so much? Well, you have the prior assessed value at on the first one, 300 Robinson Road, and prior assessed value at $1,047,800. The sale price was $1,330,000, and that was less than the list price. However, it is quite a big difference from the prior assessed value, and you can see that going right down the line. And I gave you the percent change as well to each of them. So again, this, to me, this speaks volumes to what happened in sales in 2021 and why assessments seen such a jump. What is a valid sale? It's real property listed on the MLS or a municipal listing service and has a willing buyer and a willing seller. Residential changes. So here's your residential changes. The adjusted value in FY22 is 793,223,52 with the market adjustment, new growth, the FY23 value, and the value change, which gives you that 17.179%. 179%. So here again, the commercial and the overall. So you can see how the commercial is the negative and the industrial. So what do I have? Again, that was that other slide that we were speaking about where different things were happening, the shifting of the uses, et cetera, et cetera. It gets all reflected. And so you can see that the total town change, the value change, the percentage is 19%. Valuation and levy. Levy limit. What is a levy limit? Levy limit is the maximum amount the town can levy in a given year. The levy limit can grow each year by 2.5% of the prior year's levy limit plus the new growth and any Proposition 2.5 overrides. Maximum allowable levy. This is the levy limit plus debt exclusions or other adjustments allowable. Excess levy capacity. This is the difference between the levy limit and the actual levy when the select board signed the LA5, typically, after the classification hearing. They also acknowledge that they have been advised of any excess levy capacity for the fiscal year. And again, that has changed where the clerk is going to say that we have had this meeting. Overrides and debt exclusions. Proposition 2.5 override is a permanent increase above the 2.5% allowed under Proposition 2.5. A debt exclusion is a temporary increase above the 2.5% allowed under Proposition 2.5, and it is the life of the loan. Capital exclusion is a temporary increase as well for only 1 year above the 2.5% allowed under Proposition 2.5. So this here, I hope, can explain easily for everybody how this all flows. A lot of information was just given. So your fiscal year 22 levy limit was 23,615,104. You multiply that by 2.5%, and that equals your levy increase allowed under 2.5, which is 590,378. Your new growth revenue, which is a property taxes derived from newly taxable properties like new construction, additions, renovations, and subdivisions, and personal property. Fiscal year 2023 Proposition 2.5 overrides, we didn't have any. Excluded debt to repay to bonds, currently we're at 937,416. Capital exclusions, we don't have any. You take all that and you add it, and that will give you 26,238,069, which is our fiscal year 2023 levy limit. Levy ceiling is the total full and fair cash value of taxable and real personal property, which our tally is 1,481,813,416. You multiply that by 2.5%, and that will give you your levy ceiling. This is an estimated for this evening with everything that's cooking. We have the levy to be raised, I estimated 23,300,000. What is that? In Massachusetts, this is a municipal revenues to support local spending for schools, public safety, and other public services and are raised through the proper tax levy, state aid, local receipts, and other resources. The property tax levy is the largest source of revenue for most cities and towns. Excess levy is the capacity difference between the actual levy and the levy limit. And that would give you your excess levy capacity of 2,938,069. What is new growth? New growth is the increase in property values due to new construction, improvements to property, subdivisions, new condominiums, return of exempt properties to the tax rolls, which we have seen this evening. New growth is added to the levy and the increases the town's taxing capacity. It is formulated by multiplying previous year's tax rate by the total new growth and the value for each class. Must be submitted to the Bureau of Local Assessments annually and certified prior to the setting of the tax rate. This is what our new growth looked like. Single families, we were up 5,739,900. Condominiums, enclave, thank you, 20,497,900. Industrial, 16,934,700. Personal property, 19,696,130 for a total real and personal property of 62,868,630. Total and real personal property value times the current tax rate equals your new growth revenue, which is 1,095,171. Now this gives you an idea of what our growth has looked like over the fiscal year. Parcel changes, there were 6 single families, 44 condominiums. We lost 5 vacant lands. What happened there is they had, again, a change in use. So they probably went to a condo, commercial, and personal property. And then you'll have the value changes, the percents of those changes, the new growth underneath. And it gives you a DOR utility growth we have as well. That is your wires and things like that. They give us numbers for those. So that's what that is there. This gives you some trending. So 2019 being on top, 2023 being on the bottom, you can see where our residential new growth value has substantially changed. You had a big boost since 19, and in 2020, 21, and 22, you were sticking around a close, average around the 4 to 6 million, and then a big bump again in 2023. You can see what's added to residential new growth applied to the levy limit, what portion is done, the total new growth value, and the levy limit applied to levy limit over here, total new growth. So here, now on your handouts, I had a parcel count of 2528. That was a typo. It is 2521, just so you know. The residential value, 1,208,466,785, and the dollars, tax dollars, if you will, would be 18,997,000, and that's done for each one. So if you look at the top, you guys can't see my cursor, can you? Yeah, oh, you can. Perfect. I was wondering. Okay, so you can see here that these here multiplied by the estimated tax rate of 1572, you will get what it would be for the tax dollars. So here we are, achieving the tax value by individual class, multiply each class above by the estimated tax rate and divide by 1,000. So the assessed value by multiplied by 1572, which is the estimated tax rate, equals a result, and divide that by 1,000. And so if we took this assessed value, did this calculation, this would be answers down here. Okay, and this here is the exempts. I just thought it was important to show what the exempts are at as well. Tax rate. The tax rate is derived from a single mathematical equation involving the total value in the community as certified by the Department of Revenue and total amount of the levy as required through the vote of the community at town meeting. So your total levy, again, that is an estimation of $23,300,000 divided by the taxable value, which is $1,481,813,416 equals 0.0157. You multiply that by 1,000 and you get your 1572. And again, you can see the disclaimer, the total levy is an estimate, only may change after fall town meeting. So here we'll give you the valuations by class before the tax shift. What we do see here is that our residential, for example, is at 81%, 81.55%. That's residential and open space. And your commercial, industrial, and your personal property is at 1845. This here I thought would be nice to give you, to show you where other communities sit with their CIP versus their residential. However, when I went to grab the information, these two communities do not have FY23's values ready. So it may change dramatically, it may not. But that's where we sit 2023, and that's where they sat in 2022. So valuations by class, your total residential levy is 19 million. Commercial is 1,163,509. Industrial is 2,382,000. Personal property 751, for an estimated total, and the estimated total levy is 23,300. If the estimated total levy was to increase by adding $1 to the tax rate, that would go to 24,781,813. The residential open space levy percent and the CIP levy remain the same at 81.55 and 18.45. This will just give you an idea of, on a bar, some people do better with line graphs. So this just kind of shows you the grouping of residential, where we sit with that. We still have quite a bit of residential versus your personal property, commercial, and open space being down here at 0, and industrial. So there is a huge gap there still. Shifting the tax burden. Municipalities must decide whether to tax all classes of property at their full fair cash value, share of the tax levy, which results in a single rate, or to reduce the share of the tax levy paid by the residential and open space property owners and shift those taxes to commercial, industrial, and personal property taxpayers, which results in a split rate. Your tax rate. Tax rate is made up from total taxable real estate and personal property, town meeting appropriations, state aid, town revenues, expenditures, new growth, debt exclusions and overrides, classification hearing steps. Shifting the burden. The share of the levy for the commercial, industrial, and personal property class of CIP may be increased by up to 50% as long as the residential and open space classes raise at least 65% of what they would have raised without the shift. If the minimum residential factor would be less than 65%, the community cannot make the maximum shift and must use a CIP factor less than 1.5%. 80, again, here we are, residential and open space is at 81.55%, and the commercial, industrial, and personal property at 18.45%. So what makes up the commercial and industrial classes? What is the percent, this percentage of big businesses, percentage of small businesses, your mom and pops, industrial impacts, manufacturers? Will an increase in the CI, the commercial and industrial properties, significantly lower the burden on the residential? Will an increase in commercial and industrial properties slow the development of big businesses or drive smaller businesses out of town? Do the commercial and industrial properties require an extra municipal services? So here, I'd like to point out here, the total amount that can be raised in taxes stays the same, whether there is a single or a split tax rate. A split tax rate does not raise more revenue. It simply shifts the tax burden among the taxpayers. A factor of 1, selection of single tax rate, means that all 4 property classes will pay the same tax rate. This is a recommendation of the assessor. Factor of less than 1, the law allows the option to shift the tax burden among the classes by reducing the share of the tax levy paid by the residential property owners and increasing those taxes to commercial and industrial and personal property taxpayers through the adoption of a residential factor less than 1. Factor of greater than 1, conversely, a factor greater than 1 may be adopted, which would have the opposite effect, reducing the share of the tax levy paid by commercial, industrial, and personal property taxpayers and shifting and increasing those taxes on the residential property owners. What does all this mean for the average taxpayer? So, if the board was to continue with a single tax rate, the estimated average single-family tax bill is shown here. The average single-family value has increased approximately $109,000 in value. Reminder, the values are from the 2021 calendar year in sales in Boxborough. So as you can see here, the total single-family values of $929,489,500. There are 1,216 single-family parcels, and the average single-family value is $764,383. Take this and divide it into that, and you get that. The single-family tax bill, you take this value, you multiply it by the estimated tax rate of $1,572, and you get an average tax bill of $12,016 for the year. Post-classification hearing steps. Board of Assessors will make a recommendation. The assessor recommends that the select board, adopt a single tax rate. Vote to take no action on the following: open space discount, residential exemption, and small commercial exemption. So the open space discount, we don't have open space to begin with. The residential exemption, it's never been done, and it's actually more for communities that have a lot of second homes, like your Berkshires and your down the Cape, etc. And your small commercial exemption, we don't have enough businesses in town to offer such a thing for the small amount of discount that they would get. It wouldn't be worth it. So my recommendation would be a single tax rate and to take no action on the latter 3. The Boxborough Select Board votes in accordance with the Massachusetts general laws, as stated earlier at the beginning. As amended, the percentage of the local tax levy which will be borne by each class of real estate and personal property relative to the setting of the fiscal year 2023 tax rates and set the residential factor at 1 with a corresponding commercial, industrial, personal property of 1, pending the approval of the town's annual tax recap by the Massachusetts Department of Revenue. That would be our proposed motion as well. Are there any questions?
Do you know how many years we've done the single tax rate? It's been a lot of years. I mean, I know
There's not too many towns that make that shift.
Okay.
One thing to keep in mind, especially the right to farm
Yeah.
towns. I worked out west for quite many years, and they're big on the farming as well. And there's a lot of chapter. The moment we make that shift, it's impeding on them because they are commercial. So they will be no longer getting a discount. They'll be paying the commercial rate. So, you know, so farming towns, you typically won't see it. Plus, if you're a town that wants to have a good balance of business coming in, why would you scare them away?
Right.
You know, so, and you're not really seeing, I mean, you're talking pennies on the dollar, you know what I'm saying? So it's not Boston. So, I mean, you know what I mean? If it was Boston and we had the big businesses, they have more businesses than they do real single family homes or, you know, residential places or open space. So what are, you know, they have that ability. It's really not for Boxborough. My opinion, you're the select board.
Yeah.
Your decision.
Okay, John, and then Diana.
Yeah, so Kelly, thanks for the great presentation. What you did is you presented us with an estimated levy.
That's correct.
Okay, and the final, that won't be determined until we get to town meeting, correct?
Correct.
Okay, and what we're really doing here tonight is basically saying, do we want a single tax rate or do we want multiple tax rates?
That's correct.
As opposed to actually establishing the tax rate. That's what we're
correct.
Doing.
Correct.
Okay.
We never at class. So that's one thing that we never, we don't do that at classification. It's definitely just, what do you want to do? How do you want to shift? How do you want to shift the weight? Do you want to shift it across the board? Or do you want to shift a little heavy on this side or that side over the classifications? Tax rate. That's really done, like you said, that's done at fall town meeting. It's done by the budget. It's, you know, we really don't have that control per se. Right. It's really by the townspeople. They're the ones who vote that on floor. So the tax rate is really done by that and what they vote them to give us for money as a town.
Okay.
Okay, Diana.
Thank you very much.
You're welcome.
Kelly, I want to reiterate, it was a great presentation. It's very, very clear. I just want to bring up 2 points and reiterate them myself about these points, because I think people get very confused about average tax bill, average cost, and what the tax rate is and so forth. And people, I just want to bring it to everyone's attention that the average single family tax bill is going up because the overall valuation of the town has gone up, and divided by the number of properties, that average goes up. But I want people to also take into account and really be aware that the tax rate, and this often happens, goes down. So while your individual tax assessment may go up, the overall tax rate for the town, at least this year, and liable to happen again, goes down. So even though you're assessed for more, you probably will end up paying somewhat around the same amount, assuming you weren't grossly undervalued to begin with and you have a huge jump. But I just want to bring that out because people get very confused and they focus on the average single family tax.
So absolutely, Diana. So I kind of, if I can put it in a, so if you have a bushel of apples that you're selling, right? And they're all at $1.50 or $1, okay? You buy one for that $1, but then if all of a sudden the rate of the apple went up and you're still buying one, you're still paying more because the rate went up. So yeah, exactly. It might, yeah, it just, yeah.
Thank you, Kelly. Does anyone have any other questions? Maria.
Okay. Hi, thank you, Kelly. That was great. I do have a couple of questions. I kind of want to go back down to John's question about the personal property with respect to Vibalogics in Arunta Bio, 1414.
Okay.
Because when they were going through the planning process, they were talking about tens of millions of dollars worth of equipment that they were going to be putting into that building. And so you would think that under the personal property, that would have increased. So I guess I just want to go back to what you were saying,
Sure.
right? Because that building was effectively empty for many, many years. So there was no personal property in there. Certainly not tens of millions of dollars worth of equipment. So what you're saying, it has to do with who was in the building on January 1st. So can we expect, maybe you can't answer this tonight and that's fine. You don't need to. Maybe you could just get back to me because I'm anticipating questions I may get from my committee. Can we expect that increase will be shown, effective January 1st of this year because they're in there, or where is that money? Because we were told at least 2 assessors ago that this was going to be a huge increase in our personal property value, which would then in turn increase that revenue. Does that make sense?
Yep. So,
Okay.
So this classification this evening
Mm-hmm.
is as of January 1st, 2021. That's our assessment date.
Okay. Oh, okay. So that makes more sense to me.
Okay.
Because they were not, yes, because that's when they were either just setting up. So that makes perfect sense. That's what I want to know.
Always go back to what's the assessment date?
Great. No, that makes perfect sense.
Okay.
And
I
that's
think that might be that puzzle piece for you.
Yep. Okay. And then the only other question I had is when you were looking at what goes into a tax rate, you were talking about all the different things. You were talking about new growth, state revenues, town appropriations. The FinCom had appropriated $600,000 out of free cash. Is that included there? Because you didn't call it out separately, which is fine. I just want to make sure that it's included as part of the revenues, even though I know it's not technically an outside revenue, because $600,000 it was in our motion for Article 5 to make sure that we decrease the tax liability by $600,000 by taking free cash to put towards the budget. And I want to make sure that that may not be part of this formula, but I didn't see it called out. And so
It might not have been part of my presentation, but it does get counted in Gateway, which is with DOR. So it is in one of those, let's see if I can go back.
I just don't want to miss it because I think it was missed. The reason we did the 600,000, it was missed the year before. So I want to make sure that it's in there as part of the tax rate and as part of an understanding of an offset to the taxpayers.
So that's nothing that gets put in by the accountant. So,
But that factors into your stuff, right?
May I just interject
behind
here?
the scenes.
I think that the levy is what is left after you take the total budget, you add in, you subtract all of the income, and for example, free cash, and the levy is what we're talking about, the remainder that has to be raised by taxes.
Yes.
I just want to make sure that the 600,000 is somewhere in that list of numbers, Kelly. And again, not something you need to get me tonight, but if you
Yeah.
could just get back and make sure that is either part of that budget appropriation or town meeting appropriation, that should be in there as part of the income, as part of the free cash. It's
Yes,
free
ma'am.
cash. It's 100,000.
Marie, I can get back to you because I don't know what she has placed in for that yet. So
That'd
yes,
be great.
I'll
Like
get
I
back
said,
to you.
and I think you answered the other question I had about the difference between commercial and industrial parcels. So thank you. That
You're
was great.
welcome.
Great presentation. I look forward
Thank
to
you.
hearing from you. Thanks.
Thank you.
Any other questions? All right, I'm gonna read the motion that Kelly had in her presentation. The Boxborough Select Board votes in accordance with Massachusetts General Law, Chapter 40, Section 56, as amended, the percentage of local tax levy that will be borne by each class of real estate and personal property relative to the setting the fiscal year 2023 tax rates, and set the residential factor at 1.0 with a corresponding CIP of 1.0, pending approval of the town's annual tax recap by the Massachusetts Department of Revenue, and to pass over and not adopt the small commercial exemption, the residential exemption, and open space discount.
So moved.
Oh, John, did you second? You're muted.
Second. Yep.
All right, it's been moved and seconded. Any further discussion? Okay, roll call vote. John,
Markowitz, aye.
Diana,
Lepari, aye.
and Campbell, aye. Thank you so much, Kelly.
Oh, you're welcome. Thank you.
Thank you.
That was very thorough, and glad we were able to take care of that. So thank you.
You're welcome. Thank you. Have a good night.
You too. All right. So moving on to the fall town meeting warrant, I'll turn it over to Carter. So what we're going to do tonight is, because we don't have a full quorum of the board or full contingent of the board, we do have a quorum. We're not going to do this the same way of recording our votes, but we will have everybody's votes in by the next time. So, all right, Carter.
So the warrant needs to be at the printers Tuesday morning. And without the benefit of the full board here tonight, rather than taking a formal motion and vote on each article, we're simply going to poll each of the members as to whether or not your recommendation is yes or no. And then we will do the same with the two absent members Monday evening. If you have opinions that you wish to have included because you're in the minority or you think you want to emphasize something, it would be helpful if you stated that and provided us with that text so we could get it into the warrant tomorrow. When we're all done with this, the three members of the board would vote formally to adopt the warrant as presented. The text that we add tomorrow will be circulated back out. We've tried to keep it in circulation, looking for the typo, the comma, the last minute change from a sponsor. And so if that is agreeable to everybody, we would begin to work our way through the several articles. And Jen, I think that's consistent with what we spoke of.
Yes, that is consistent.
Okay, so the first article, and just one last thing, the intent is to use the consent agenda again for the fall town meeting. So the first article are two late bills, one which you have seen prior to this, and then one which did come in subsequently.
Okay, I am in support of these.
So
I am as well.
So am I.
Okay.
Okay.
And have to reload the package here, so bear with me for one moment, please.
Article 2 is the collective bargaining
So
agreements.
Article 2 is the collective bargaining agreements. We briefed you earlier tonight. I think that we'll have to take some recommendation votes or polling on those as we get closer to the town meeting. We are most hopeful of having several of the collective bargaining agreements settled by that time. And I would note that we've been doing our best. Your Finance Committee Chair was in that executive session, and we've been doing our best to keep them informed as we go along. So with that, we then move to Article 3, and we would simply need to know who is yes and who is no, and if there's any additional material you would like included in the warrant.
I'm a yes.
Remind me, Article 3 is what? I'm sorry.
Amending the personnel administration plan.
Right, I mean.
Article 3 amends the, the personnel plan. It increases rates of pay for 2 part-time per diem positions we're having some issues with. It cleans up some language that proved confusing on how to set the rate for promotions or reclassifications. It offers regular part-time employees prorated vacation, and it creates that sick leave bank that we've been talking about over the past few months.
I'm in favor.
So I believe that just leaves Diana.
Oh, yes, I said I'm in favor.
My
Okay.
apologies.
I just lost my text here for a minute.
Article 4 amends the operating budget. There's some dollars to be added to the town clerk personnel arising out of that differing interpretation from the personnel bylaw. The same is being done in the impact was the same in the Office of Land Use and Planning. The difference there is they've had a vacancy, so there were sufficient monies to cover it. This next item is the assessor, as we have 100% of the administrative support dedicated to assessing as opposed to being split between assessing and accounting. The treasurer collector issue is that of the finance committee, the finance director. Legal expenses, this is a number that the finance committee chair suggested when she and I sat down. And the town assurance arises out of increases in your 111F policies and your liability policies from a change in your experience rating. You had some pretty severe 111F expenses. You'll see the summary there, and I don't know if you want to proceed collectively or individually. You can see that the finance committee had some varying recommendations, unanimous on 3 of them and split on 2 of them. So however the chair wants to proceed, I just point that out there as one example of what one committee has done.
Diana?
I say I'm personally in support of all of it, so I would say yes for everything.
John?
Yeah, I support all of it as well.
Okay. I wrote the minority recommendation, which is I support all of it except for I think the timing of the finance director could wait a little bit. So I am in favor of everything else.
And we'll include that minority opinion when we
Yes.
put this together. Article 5, you've been hearing us talk over the past few months about being a bit behind on assessing services. And the DLR really wants to make sure that we have all the funds in place so we're completed for FY24. They did ask me to add a note that this will now be a year-to-year amount, and that in the future it would be, and I now see I need to proofread just a little bit better. So that last sentence under the FinCom will be as anticipated anticipated that the future funding will be from taxation. But you can see that the Finance Committee did recommend 6 yes and 0 no.
I am in favor.
I am
I'm
in
in
favor as
favor.
well.
I am as well.
Okay. Article 6, this is for 3 items. First is the MS4 permitting requirements. They were not requested by the outgoing planner at the annual town meeting. So this is a bit of a catch up here. We've spoken to you about the need to create a locker room space at the police department for the female officer, and hopefully the ranks of our female officers will grow. But in order to have that space available to be retrofit as a locker room, we need to find alternative space to store the items currently kept in that area. So this will replace the deteriorated storage facilities outside and with some climate control as well. The Water Resources Committee, that would actually be implemented for the most part by Ed Kukula at Public Works, but this covers primarily the Harvard Sportsman's Club. We have to pull those wells out, seal the wells, restore the site. And I think you've all had copies of that. And if there are any dollars left, they'd be used for essentially the original intent. Here also, the Finance Committee was a recommendation of 6 yes and 0 no.
I'm in favor.
John?
I'm in favor.
I am as well. So you'll notice that I gave some language for draft recommendations. So if you have any changes to those, I did not put any recommendation for Article 6 because I wasn't sure if, people had questions or we needed more discussion. I will write something unless somebody wants to do that.
We'll let you do it, Jennifer.
I will do that. Carter, I'll get that to you.
That'd be super. And Maria, correct? I think you're still on.
Yes.
Fine. I didn't see any recommendation from the Finance Committee on this. I may have missed it, but we can circle back tomorrow if I've missed any of the material that you sent me.
Yeah, Carter, no, you missed. I think I'll check. I'll get you in the morning. I thought we had written something up for this, but it's possible we just kept it short and just said we recommend it.
Well, it's also possible I just missed it.
Okay, we'll circle back in the morning.
Yeah, we'll just circle back over the next day or two to make sure that I have everything from the Finance Committee.
Okay.
Article 7 is supplemental funding for Liberty Field. It's at $175,000. This will allow the drainage that was a primary function here, the basketball court, the walking path. Unfortunately, between the time that the 2021 annual town meeting appropriated the funding, supply chain issues and price increases across the board for all kinds of bid projects really became stratospheric. I would point out that the Recreation Commission does have a commitment from a local foundation to gift $50,000 towards the project once the pickleball courts are completed by December 30 or 31 of 2023. So the net cost comes down to $125,000. And depending upon how much of the contingency needs to be used, the net cost could conceivably be even less. But we're trying to make sure that they have sufficient contingency and everything that they need to get this project finished.
And we do have written confirmation from the foundation. So we do have that going for us. So
yes, I think we provided that to the Finance Committee, the Select Board.
yes.
All
right, Diana,
I agree.
John,
I support this.
and I do as well. So assuming Les and Wes agree, we can take out the census. This is about the majority recommendation.
Yep, okay.
Okay?
The next article is supplemental funding for Sergeant Road. There are some grant contingencies, not a great deal, and some costs that have cropped up during the final survey, the 21E, all of the various steps you have to go through, and we're seeking an additional $25,000. Now, the total costs that we think we're over are in the $35,000, $37,000 range, but in addition to the $200,000 grant that the Foxborough Conservation Trust has made, they've raised an additional $17,000 above and beyond, which will offset some of that $37,000. They've also applied for an additional grant of $25,000. And in the next week or two, we'll be bringing you an amendment to the memorandum of agreement, which will slightly lower the interest rate that the Sudbury Valley trustees need to recover on the monies they're taking out of their trust fund. So we think that at the tail end of this, the $25,000 of funds very well may be reduced to some lower number. But again, as with the Liberty Field, we need to make sure there's sufficient monies there at the front end.
I support this.
I support it as well.
Okay, and I'll write a recommendation.
Article 9, the Economic Development Committee has requested $10,000 towards a package of technical planning and assistance from the Urban Land Institute of New England, develop a to bring into town a technical assistance panel. You've all had the benefit of their summary, and we do have a map that we'll be inserting that shows the current town center and shows the initial lines of the study area for a potential expansion. And you can see the votes there on from the Finance Committee and the EDC.
I'm in favor.
I am not in favor. We have done many studies, including the recent charrette that was handled by the University of Massachusetts. I just feel that we put a lot of money into studies, and it's been going on for quite a long time. And I think we do know what needs to be done, and it's a question of just doing the work. So I would vote no on this particular, and I'll write the minority, assuming it's.
Thank you. Yeah, because I'm not writing that.
Okay, I'm in favor because I think the amount of additional value that we would get from the Urban Land Institute would be beneficial because there's still open questions about what can we do with the remaining town center. And I know that the EDC folks have put a lot of work into this.
Okay, so Diana, when you can get us that minority
I will,
report, greatly
yes.
appreciate.
And just let it be said that I totally support a village town center. So that's one of the things I most support. I just want us to get it done instead of talking about it.
Article 10 recodifies the zoning bylaw. I've been told that it's the practice of the board to defer to the planning board on matters of zoning.
It is. I don't think anything prohibits us from taking a vote, but we typically have not. So I'm fine with skipping over those unless someone feels
I'd like to defer. I think we should stay with that practice.
same.
Yes, I agree. Although I have some concerns about the Finance Committee, for example, voting or taking votes on these issues as well. Technically speaking, everything we do in this town has some financial impact, but I don't really think it is the purview. And so I would say we should stick by our practice. But I am concerned that it might be an imbalanced opinion.
I don't know, it's been the practice, that the finance committee votes on everything, so, but anyway, it doesn't
Not
matter.
on zoning matters. It's
Well, we don't tell them what to do. They're not under us, so. Okay, so
I
that's it
will
for the
skip
warrant.
over 11, 12, and 13 as their zoning matters as
Yes.
well. So what we would look for is a motion along the lines that we have drafted for you, and then we would hopefully quickly poll the 2 absent members Monday night and have this off to the printer Tuesday morning.
Okay, I move to authorize the fall town meeting warrant as presented, subject to any review of town council and final proofreading for textual or typographical errors.
Second.
Can we amend that, John, to say, and a
Sure.
polling of the absent board members as to their position on the various articles?
So moved.
Moved and seconded. Any further discussion? Diana,
Lepari, aye.
John,
Markowitz, aye.
and Campbell, I. Thank you to everyone who put together the warrant. I think it is, the process seemed to be pretty smooth on our end. So, okay. Thank you for that. So we have the warrant for the 2022 state election. That's something from the town clerk. It's in our packet.
Yep.
Do we need to discuss it? It's pretty much a standard thing. Does anyone have any questions or anything they want to ask about it?
No.
No? Okay.
I
So,
move to approve the warrant for the 2022 state election.
oh. Okay, I don't know what happened there. Okay, so it's been moved. Diana, do you second?
I do. Second.
All right, moved and seconded. Any discussion? Diana,
Lepari, aye.
John,
Markowitz, aye.
and Campbell, I. All right, next is the use of fire police vehicles for the United Church of Christ holiday auction. So this is something we have voted in favor of for many years. So the letter is in our packet. So Diana, do you have something to say?
Yeah, I do. I know we have voted for it, but I want everyone to be aware that it is the policy, and it is a stated policy of the select board and the town, that we don't use town resources to support any religious organization. I know that the UCC Church is very close to the town in many, many ways, but it is still, in my opinion, a violation of the separation of church and state. And I have voted for it in the past. I did last year, but I am not happy with doing that, quite honestly. I'm concerned that it is using town resources for the support of a religious organization.
Okay, Carter?
I would understand I do understand the position. I would point out that there is an out in this good cause, in that 100% of the proceeds from these rides are donated to the Acton Food Pantry. So in this case, the church is being a conduit for a 501c3 nonprofit, if that is of any if that's of any salve for you in your decision making.
Okay, that's actually a great clarification. And then,
Right.
Marianne, is that?
Yes.
Yes, hi.
Hi. Yes, I just raised my hand. I had the same point to make as Carter just did, is
Okay.
that for most of the stuff in the church fair and in the auction, the church takes most of the money and gives some of the money to another charity. This year it's the Acton Food Pantry. But for these 2 rides, 100% of the money we get goes to this year to the Acton Food Pantry. So there is
Thank
no support of the church by the town, essentially.
Thank you,
Thank
Mary Ann.
you. All right, so do I have a motion to, Go
I
ahead.
move to approve the use of a fire and police vehicle for the auction of the United Church of Christ Boxborough silent auction.
Okay, I will second that.
Okay, it's been moved and seconded. Any further discussion?
Well, given the fact that it is not going for the support of the church and it's going to the pantry, I would support it.
Okay, so Carter?
Just for the record, for your minutes, you might want to add, provided however, that 100% of the funds
Exactly.
raised are donated to the Acton Food Pantry. And now you recorded in the minutes something that a citizen might not see if they were relying only upon your minutes.
John, do you accept that?
Thanks.
Yes, and
That
Diana?
modification.
Yeah,
Yes,
you
I do.
accept that?
I do.
Okay, any further discussion? Diana,
Lepari, aye.
John,
Markowitz, aye.
and Campbell, I. All right, thank you very much. That
Thank you.
passes. All right, the volunteer appreciation party. So we sent out invitations and then found out that Blanchard is having its Fall Fest at the same time. So we wanted to just discuss whether or not we should change it. Diana, did you want to talk?
Well, it came about because actually I called Kelly about another issue, and she mentioned that we're having some difficulty because there are a lot of conflicts on the 22nd. And so she and I got into a discussion, and I said, well, it seems to me that having a dinner for 3 hours from 4 to 7 on a Saturday is problematic anyway for a lot of people. There are a lot of things going on, and it didn't seem to be much of an event per se. So I suggested we do something else. And I'm happy that I learned that, unfortunately, according to Massachusetts law, we cannot, with tax dollars, provide alcohol.
No.
Of course, that doesn't preclude our, making contributions and doing something else. But what I was hoping that we would make it more of an event. And this is just perhaps a preliminary discussion, but certainly something around the holiday season would seem to me to be more festive. Again, I'd like to revisit the idea of maybe having a punch or something, at least something that we could make it a little more festive, or perhaps a brunch, something that wouldn't require a great time commitment from volunteers, but would add to the enjoyment of the season. So I'm just kind of putting it out there and leading this discussion to get some ideas without, we want to show our appreciation to the volunteers, but we don't want to make it something that becomes difficult. We want it to be a friendly gathering. And unfortunately, that's the season of going out and doing a barbecue. So.
Right. I do like the idea of a brunch. I think that could be fun, and it could be more of, we could think of some fun things to do there. So are we, Diana, do you and I want to work on this offline?
Yeah, let's do that.
Okay.
Because I think maybe we could talk about it and bring a proposal to the board and have a general idea of how we want to structure it. I just would like it to be more festive and more interesting.
Okay. Well,
Sure.
I do want to thank Kelly for all the work she's done for it so far. So we'll just postpone it for now and say we're going to get back to people with a date that hopefully will work a little bit better.
Exactly.
And I think also we should make sure too that, if we're committing to putting this on, that the select board is committing to doing
the work
towards it. So, because that didn't happen with the employee event, and we're very grateful again to Kelly. So, all right.
Yep.
So we'll send something out just telling people. We'll get back to them with some alternative dates, and maybe too, we can, in that email, we can ask for suggestions.
Sure.
So, all right. So Diana and I will come back at some point and let you guys know. All right.
Okay.
Is there any other business, any reports?
No.
Nope.
No? Okay. Do we have a motion to adjourn?
So moved.
Second.
Okay. There is no discussion on that. Diana,
Lepari, aye.
John,
Markowitz, aye.
and Campbell, I. All right. Thank you very much.